This is not how price moves. As you all know, there is no such thing as just higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, and it's a perfect little retracement, 61.8 fib. Yeah, 62.8 fib, whatever the fuck you guys are trading, right? Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hey, how's it going, guys? Welcome back to mentfx and welcome to 2022. Happy New Year to everybody. I hope you've all spent it great, spent it with your families. And without further ado, this year is about to be intense. It's going to be insane. We're going to be bringing forward the mentfx algorithm coming out very soon. Mentfunding is doing absolutely amazing, and a lot of traders have already been funded, as well as an already $60,000 payout. And the mentorship has continued to grow, has continued to sustain itself, and has continued to become increasingly more active, increasingly more helpful, and has increased its rate in the consistency found in its members. So it's been an absolutely amazing year. 2021 had filled us with a lot of blessed things in a time when there was a lot of shit that went down. But that said, we are back at it now. The channel is as live as ever, and I want to make sure that we continue in that direction. I've given you guys a ton of free content that you can use to get funded, and a lot of people have done that. I've seen an immense amount of support and DMs on Instagram and in the comments, and you guys are amazing for making mentfx what it is and what it's going to be. And from here on out, we're just going to continue to grow and continue to deliver the highest end of education to all of you. Now, coming into 2022, I had the fastest 1-40 run I've ever had. So it wasn't, of course, a 40RR secured trade. We'll go over in a second. I actually went in depth on it yesterday. I'm going to delete some of this stuff on here because some of it is specifically mentorship material, and there's ment block specifications that we do not teach on the public YouTube channel, just because it goes a lot deeper, and because I allow and leave some things for the private content with the exclusive stuff. But that said, it doesn't mean that we can't come into this week with some new stuff that we can deliver to you, so you can begin to use your smart money understanding into the new year and begin to approach the charts the exact same way that we have always approached them, with a proper understanding. Now, a lot of people are not trading during this specific time. I don't know exactly why not. The markets have always delivered the exact same way all the way through December. We had been catching some of the best trades we've ever caught. Coming into the end of 2021, we actually had, I think, 5 or 6 new members get funded in the mentfx mentorship. So that was phenomenal. And of course, if you want more info on that, check out the links below. Other than that, let's get into this. So in the last video, we spoke a little bit about sessions and the importance of understanding which sessions correspond to the trades, to the charts and the pairs you're trading. For instance, if you're someone that wanted to trade Euro US dollar, or honestly any pair, what you want to do is you want to link up that currency to the time zone of which that currency is linked to, and trade during the main morning hours of that pair, because during that time, traders are going to be on the charts. People are going to be actually actively trading, looking for trades. People are going to be actively managing their positions. People are going to be actively setting themselves up at their desks, at their algorithms, whatever it is. And the most volatility and liquidity is going to be coming into the market. And during that time, when the most volatility and the most money is coming into the market, what you're also having is the decision of that specific daily candle, or of that week, or in this specific time, or in this specific case, the day, if you're going to have a major continuation or a major reversal. And this is also going to be in tandem with your 3-box methodology or your already predetermined structure delivery. So for instance, if you are trading during the Euro, if you're trading the Euro US dollar and you're trading during the US session, what you're going to find is that if you had a 3-box method, or you had a structural delivery on a higher time frame, and let's say this was a 4-hour zone, right? And you had price, or even like a 1-hour zone, either one, both work, right? And you had price coming into there. And then during the morning of the London session or the New York session, price had come and tapped into this. On the lower timeframes inside of this area here, what you're going to notice is lower timeframe 3-box methodology setups, or as we like to teach them here, normal weak to strong hand transfers or breakout structures to the top side occur in that area, and for major reversals to come in and the delivery of higher price to occur to the next points of liquidity, which, you know, as you get in on a lower time frame and shuffle yourself in and get to hold that trade out longer as you manage it, break even early, right? However it is, using the structural points inside, you're going to be able to take that to the higher end. And as it delivers to that higher point of liquidity, that RR on that trade is going to be significantly larger. So that said, let's talk about the start of this week and exactly what happened. It's currently the 3rd of January, so it's Monday. And as you guys know, I traded during the Asian session, which means that I traded basically last night, Sunday at 7 p.m. EST, which is basically starting right here. But we're going to talk about the outlook of the week and how we came into the week, why we came into the week a certain way, and what we were exactly looking for coming into that week. So we're going to delete some of this stuff on here. Again, if you want to go a lot deeper and understand from a more refined standpoint how we're looking at things, how we're reading the market and doing it across timeframes consistently and constantly, you can definitely check out the mentorship link. Otherwise, always go through all the YouTube content and you're going to find yourself learning a lot more than you knew prior. So going into the higher timeframes here, coming into the start of the week, what you'll see here is for the longest time ever since we've tapped into this daily demand zone right here with the inefficiency fulfillment, we have been basically bullish until this point. And just to showcase this a little bit deeper, I'll be happy to jump into here. Head up here for a second. Let me see if I can find this. So for the longest time ever, we've been very bullish on UJ, and this has not changed. I don't know if I can find it here right now, but if I can, it'll be very helpful for the video. So let me just take a look here. Okay, I can't find it here, but we're gonna go into the webinar recordings here. Oh, actually, I have to. I'm gonna pause this 1 sec. Okay, so I've gone ahead and found this first, so you guys don't have to wait here with me as I look for this. But basically, webinar 33, I had to cover the links because, you know, those are exclusive to the mentorship only. But if we go over this, I did an outlook for over about 2 hours, as you can see this. One of the pairs we were looking at was UJ, and I've done this on the previous webinars as well. But in this case, this is the closest one I found, so we'll just go with this one. And you can see where we're coming in with this bullish bias I was drawing out. You can see I was talking to myself in this case. Give me a second. So let's skip this forward a little bit. And what you'll see is we basically highlighted this high right here. We drew in that liquidity. And basically the expectation was to see, let me mute myself here, was to see that price continue into the higher price action, right? So if we skip this a little bit forward, right, you can see some of the refinements that we've had there. But overall, the expectation coming into that was to see the delivery to this liquidity point here. And lo and behold, at this point, we are still delivering to that. The bias has not shifted, has not changed. And coming into the year, coming into 2022, coming into the first session of 2022, nothing had altered in terms of the way that we're viewing the price and the way that we're coming into considering price. So a lot of you might see this here. This is the 3-box necessary setup right here. And you can see it actually came a little bit below it. If you haven't seen the 3-box methodology videos yet, definitely check them out. They're some of the best performing videos on my YouTube channel. So you guys will find them interesting. But this is going to be taking that idea of sessions into its next logical conclusion, and also demonstrating to you guys that it's not about the time that you're trading during, and it's not that it's the new year or it's December. It's just what your rules are and executing the market under those rules with the same thing in motion every single time. Nothing has changed from really the beginning of what I've taught, and the core foundational course found in the private mentorship has never altered. And if you join, you'd see it's still from over a year back and still holds consistent and has only evolved in terms of what we see and the refinement over time. Just like this YouTube channel has grown and taken multiple concepts and ideas and understandings and transformed them into a utilizable, able to get funded with mentfunding, by the way, if you want to, system that you can use and you can learn and you can journal, and then you can demonstrate successfully on the actual charts. So let's get into this actual day. We'll go over it pretty quickly. Starting the day, it was actually on this day here, right? So starting at that 7 p.m. on the 2nd, I did not trade the first. As you know, the first was a Saturday, so markets were closed. But starting the 2nd, the first trade of the new year, we're going to move this out to the 1 a.m. mark. because that's when my session pretty much ends and I wasn't trading after that. But as you can see, that bullish bias has been holding forever. And ever since that deeper daily demand zone has been tapped and has held its move through, the 3-box methodology, or the next liquidity draw on price, is going to be at this high right here. And since that webinar and the webinar before that, as you guys just saw a second ago, we've been bullish on this pair and going into it bullish. So that means that every session we're going to come in with more of a bullish mentality, looking for that continuation higher. It does not mean we can't be sellers and buyers at the same time, but it means that most buys are going to work out a lot better, even though the daily, for instance, is going to have, down days, and some days might be down, and those can provide to you some of the best setups and give you really good RR and really good and nice entries. The higher probability end of trading, especially if you're new, is still going to be to the top side. And you're ultimately going to see, if we go to any time frame in between here and here, you're going to see more green candles or up candles, or in this case, white candles or gray candles, than you are going to see down candles, right? And that's the idea of setting up a higher time frame bias, even if you're someone that scalps and wants to get involved on lower time frame structures. And what you're actually going to see is this fastest 1 to 40 that I've ever experienced in my life. We'll talk about the management and everything about it in a second. Actually happened on the downside of the market, and it happened, and you might not believe this, inside of right here. So this one black candle on this 1 hour right here that you see right there during that session, from this line here to this line here, is all it took for me to hit that really, really high RR. Now it's a little bit less than that because I had my risk actually preset at around 0.8 pips instead of the actual 0.2 pips that you're about to see. But let's go into the reasoning behind what happened here, why we did what we did, and how sessions played a key role in allowing us to trade a volatile pair during any time, right? So as we understand, when you look at majors, or you look at pairs like the euro US dollar, or gold, or the pound US dollar, right? GBP USD, what you're gonna find is those pairs are oftentimes going to remain stagnant and not moving, and create more consolidating ranges, or accumulation or distribution ranges, or weak to strong hand transfer ranges, or supply to demand or demand to supply ranges. Whatever it is you want to call it, whatever floats your boat, whatever makes you feel giggly inside, you should go with, right, is going to create more of these consolidated ranges during the Asian session, aka times like past 7 p.m. into around 1 or 2 a.m. Oftentimes those will see the most bit of consolidation in area, and then during the London Open and London session and New York Open and New York and London rollover, those major pairs that have the euro US dollar or the pound US dollar are going to experience the largest moves during that time. And those moves can be large moves to the top side or large moves to the downside, right? Both are going to happen. But what you're going to see is that the major moves are going to come in motion and are going to hit the market during those major confluences in time zone and the pair, basically with the pair and its respective time zone, right? So similarly, so let me show you an example of this very quickly. If we go to euro US dollar here, this did not play out at all, but this is the beauty, again, just showing you guys of having a bias. If you had a buy from here, the buy is probably going to be managed to break even by the time it's coming back down. And if you're looking for a deeper buy, it kind of trades right through it. So probably no element of being able to enter there. You can even take a look here, right? Weak to strong hand, weak to strong hand, weak to strong hand, no confirm whatsoever, continuation lower. Just a quick example of how having a bias does not mean that you have to trade. Just showing you guys a quick example of that so you guys understand that just because you have a 3-box setup or you have an element or a bias laid out doesn't mean it needs to play out, and it also means that you can stay out of it very, very easily, right? When you have those setups and then they get to play out and give you those setups that you're looking for, right? When there's that weak to strong hand transfer, and the continuation, that's when you're able to take those buys up. So back to the session advanced knowledge, or the in-depth knowledge on the advanced session material. If we go to an hour chart here and we talk about this a little bit, so let me delete all this right here. And we just look at this very quick, right? We can start back here. It doesn't really matter where we are, right? But what you're going to see is, if we go ahead, let's go to a 30-minute actually, right? So looking at the euro US dollar, what we have to instantly interpret is that during the London and New York session, this is going to see the biggest jam-packed movements, whether they're continuations or complete reversals, because both both need smart money to come in a large form, which is exactly what happens during these main time zones to their respective currencies, right? So in this case, what we're going to expect, and this is not always going to be the case, but it is oftentimes going to be the case, and people teach courses on this, but they don't even understand why it necessarily works. But this is basically why this works and why it's sometimes, it doesn't always do it, but most of the time it's going to line up pretty well. And what you're going to see is that during the Asian session, which is anywhere after basically kind of 7 p.m., 6, 7 p.m., you're going to see a stagnation in price and a minor consolidation created. You're going to see something like this, right? Even if it's a little higher, maybe something like this, right? A channel, some kind of channel. This is where channels are created, right? It's creating that interest on behalf of dumber money or even dumb smart money to start getting involved without understanding why they're getting involved. And what's going to happen is as we roll around to London Open or New York Open, you're going to see either huge reversals or huge moves, or you're going to then into the next session see huge moves or reversals, right? And this is oftentimes what's going to happen. And you're not going to see that consolidation until we come into the next Asian session. And by the time we do, you'll see some kind of new consolidation occur until the next session comes in. And the idea behind this is because of the previous video where we basically shared our session sauce and how to think about sessions. So you can decide what pairs are best for you to trade in terms of what time zone you're living in and in terms of how to balance that with your work life, with your private life, your gym life, whatever it is that you do, right? And then you can decide what times you want to trade and then go ahead and get funded doing that. And best of all, if you want to get funded and you don't have the time to constantly be on the charts 24/7, check out mentfunding.com because we have a one-step, no time limit that you can, of course, use to get funded. And we're coming out soon with a weekend holding option that you can pay a little bit extra for. So definitely keep your eyes out for that. The announcements are coming soon. But other than that, let's get back to this idea right here, right? So if we go in and look at this right here, right? Let's just go left a little bit. And we'll just start right here. It doesn't really matter, right? What we're going to see is let's just pick a time. So whatever this is, we'll just go to behind this, right? So notice this at around 12-ish. So let's go till 1 a.m. or so. So 1 a.m. is around here. So that's usually, so around 2 a.m. or after 2 a.m. is when you have, at least in my book, London session kind of come in, London Open. And then around 8 a.m. or so, 9 a.m., you have American session come open with the rollover. I mean, with the what's it called when they're merging, when they're together. What do we call that? Whatever it's called. When London and New York are rolling over together. It's not rollover. You don't want to trade rollover session. That's 5 to 6 p.m. EST. But when they're overlapping, when the two are overlapping, that's when that's also fine, right? That's usually around the 8, 9 a.m. until basically lunch or so, and then a little bit after, maybe till 4 p.m. it can sustain a move. And that's mostly just New York. So with that in mind, right, let's understand what's going on here. Let's make these black so you guys can see them much better. There we go. And you can see that's around 2 a.m. And right before it, right, if we just take a look, what you have is a large consolidated price range of the move, right? Before the day, as you can see, we can even start back here, right? So if we take a look at the time at the bottom. So you should be looking at the bottom of my screen right now. You can see here's that 7 p.m. And 7 p.m., right, we can draw that out right here until about 1 a.m., which is around right 2 a.m. right there. So around 2 a.m., if you look at this, we have a very consolidated price range, right? This is the idea of Asian session during a pair that corresponds with the New York and London session. And what comes in as London opens? Well, in comes a new huge structural move up. And then in comes that 7 a.m., 8 a.m. New York session. And again, you have the huge moves and structural continuations down. Now, it might look hard to trade and it might not look like you have anything to enter there, but notice what's actually occurring, right? If we go to a lower time frame, you're going to see a lot actually occurring in these areas, right? I'm just going to show you very quickly, and I'm not going to go in super in depth on this because we do that in the mentorship and you can go and test this yourself. But just zooming out here and taking a look at this, if we can get it to load, because apparently my internet has to be slow when I'm recording a video. There we go. So if we just take a look at this, what you're going to see is during that time, right, as that session comes in, that's when you have the major reversals in trend. And those trends are then held by the 3-box methodology, and then are released into that session. And that session then allows that smart money interest that was able to get involved here a little bit late, and that other real smart money interest that is smart, understands a lot more, has those bank orders on their thing, has the prop firm liquidity pools drawn out, not really looking at the actual price, maybe looking at an order book, start getting involved below all this range liquidity, right? So this is what people teach as like the range liquidity sweeps. It's not so much that it's a crazy Asian sweep. It's just that when you're looking at EU, you're going to have the sweeps of the liquidity that was created over that short period of time where nothing's going to be happening, because it's creating anticipation in traders. It's creating that belief that, we're creating some kind of trend channel downwards. We're creating break and retest of support resistance. On higher time frames, we're creating head and shoulders. On higher times, we're creating those triple tops, whatever it is that retail wants to think of, right? So as that's happening, it's making anticipatory traders trying to get in with certain ways of thinking. And as they're doing that, those orders are being matched off, those weak-handed minded individuals that are then trying to place their stops and everything they want to get in, trying to make the money they can make, right? That gets cleared by that smart money interest. That smart money interest begins to trade above their respective protected highs and protected lows. And if you want more about that, check out my protected lows and protected highs video. We switch above, and as we switch above, right, we give other smart money or just normal smart money or smart money footprint traders to get to have time to get involved with 3-box methodologies, with Wyckoff, with their volume congruence, whatever it is that they want to be using. There's many smart money mentors, some using many different things. So follow whoever you want, but at least understand why you're following the certain things that you're looking for, right? And that's why during the session, you have that huge area to get in and an ability to get in, because that manipulation and order accumulation is occurring. And after it's accumulated and it's occurred and all the demand has been taken up, what is going on? It needs to run to higher prices. And that's where they begin to unload. And as we come into, once again, New York, you have one of two things that can happen. We can either hold the 3-box methodology to the top side and keep going long into a bigger continuation and continue delivering. And how do you know if it's going to continue? Well, oftentimes you can pair that off with your understanding of the higher time frame bias, which again comes from what? Either you're doing the webinar outlooks with us in the mentorship, or you're doing them yourself, but you're using the higher time frame to establish where you believe price is being drawn to and which liquidity points of interest, right? Which liquidity points in terms of structure are going to be delivered to. So what do you have in this case? Well, what you have in this case is then a breakdown of that structure, right? And notice how we don't even have to zoom in onto the price to see all these things, right? You can, and we will go more in depth on this in the mentorship, but you don't need to do that at all right here, right? You can see that break of structure now that is then supported by, once again, smart money, and very smart individuals are getting into most of their sells here and transitioning most of the weak-handed into the strong-minded, all up in these areas. And then we see that footprint occur. And that footprint happens, and now we know exactly what we're looking for as we're going short. And once again, into the entirety of New York, you have that push through in price and that continuation that you then have no area and no way of getting back in on, right? Notice these impulses. That's why those impulses occur. A lot of people teach you to just trade like this, right? Get in, get in, get in. This is not how price moves. As you all know, there is no such thing as just higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low. And it's a perfect little retracement, 61.8 fib. Yeah, 62.8 fib, whatever the fuck you guys are trading, right? Trendline fib, oh yeah, getting in, right? There's no such thing like that. What you're going to have is you're going to have 1, 2, at max 3 opportunities to get involved on a structural play, and the structural start of a play, whether it's in a supply and demand zone on a higher time frame or one of these main session based reversals that are still part of your higher time frame idea, which is rooted in the exact time frame the exact pair you're trading. And during that time, what you're going to be able to do is get involved on that and then have that position run, right? Because you're not always going to get continuations that come all the way back into their zone. A lot of people get stuck in the smart money side of things of waiting for this move right here to happen. And what oftentimes happens is after the move has already started and smart money has gotten the accumulations they needed to get, right? And like maybe this was something like this before. There is no coming back here. And what happens is a lot of smart money starts seeing this move here happen like this, right? They start watching that. And all they're thinking is, I want to buy here, I want to buy here, I want to buy here, and I want to buy here, right? And as a result, what happens? when that price begins to actually reverse properly and you have opportunities once again a few times to get involved, they're already looking at all these areas to buy. And as it hits there, they lose. And as it hits there, they get a little mitigation, they lose. It hits there, they get a little mitigation, maybe a big mitigation. They lose, right? Why is that happening? Well, because they're not attuned to the most recent 3-box methodology, 1. 2, they're not attuned to the session they're trading or the pair they're trading and why it might be moving or reversing or continuing in direction. 3, they might not be attuned to the higher time frame bias that they have outlined. Or 4, they are still stuck in the retail mindset of support resistance because they didn't get the correct education in the smart money space and looking for this support resistance striped pajama format. What does that mean, right? So I talk about this a lot, but that's when you go, okay, demand, 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 demand. Right? And now you're watching all these demand levels, right here. And as price gets to them, of course, that's all you're interested in trading. And if we start drawing these out normally, what do you start seeing? You just start seeing basic support resistance, which is what a lot of smart money is teaching you, right? And this is what you're looking to trade in. And what do we call it? A striped pajama. Instead of being attuned to the fact that we are now breaking down again, and the only striped pajamas or supplies you should care about is supply, 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 supply. And you have those 3 to 4, maybe max 4 opportunities to get in with your weak to strong hand transfer after smart money has captured all of weak hands and shown you the footprint that they want to move. You have those opportunities. Now, if you're stuck looking at these, and again, we're on a 1-minute chart here, but this applies to every single time frame. Do not get confused or do not think that this is only applicable to scalpers, right? I've done this with people on the daily, on the weekly, on the monthly. I've shown you a video where it's worked on the 6-month on the Chinese pair that I predicted literally about a year ago in the mentorship. And you'll be able to see that if you join up with the mentorship, if you go to the webinar recordings and watch the first one or the 8th one, I forgot which one it is. I talk about this specifically. But notice how the sessions affect price, right? Now, let's go back to our 15-minute. So looking at this, you now understand how, or 30-minute, I guess it was, right? You can now understand how if you're trading something like the Euro US dollar, you want to correspond that to the time frames, to the sessions that those time zones are respectable to, right? So in this case, if it's Euro USD, it's going to be London and New York, right? So that means that during Asia, you're going to see consolidation, and during London, New York, you're going to see those structural continuations and structural continuations. Now, coming into the next 4 p.m. or so, we should see some kind of consolidation, right? It's not always going to be the case, but there should be a consolidation of some sort, right? So there you go. Some kind of consolidation occurring there, right? And now as we're coming into that 2 a.m., this London session, we should start to see moves come in that start to go and run liquidity in terms of higher time frame structure and lower time frame nice moves in terms of smart money or Wyckoff, weak to strong hand transfer, supply to demand transfer, and the continuation of that. So coming in now, we should see real movement. There's that real movement down, comes, traps all that liquidity, takes it out. And now it's around 12, 11 a.m. So that means we're back into New York. There should be some kind of other big follow-through move, right? And lo and behold, you have the follow-through move of that New York. Now we're coming around to 7 p.m., which will be around here, right? So after this point, we should start to consolidate a little bit more. And you can see we've already started to, right? We're building, again, that same narrative, consolidating into that, right? We should see it pick up around here because that will be the end of Asia and the start or the morning of that London session. So in or around this area here, we should see price begin to create those larger starts to moves, right? Similarly, same thing. There we are. We come in, beautiful move up. We come into the American session around here, right? So let's see what happens. Here we go. Huge moves come into America. Right now, we can look for those continuations or reversals again. Huge reversal. Beautiful trades on the lower time frames, right? Now, we're still in America, right? We're coming into S&D zones, right? They become better and more probabilistic, and you get those nice moves from those S&D zones because it's US session. And once again, we should see things subside or become slower during, once again, the Asian session, right? We get around Asia, and what do you see? Again, that consolidation range is beginning to occur. We get that consolidation range. When should it pick up again? Around here. Around this point here, we should see another huge impact and movement into the market. That's when the composite man steps in. Who's the composite man? A ton of individuals that have money. It's not one person. Well, it kind of is, but it isn't. It's an idea. It's a methodology. It's the way smart money operates. It's why smart money can operate the way it does, right? So that consolidation occurs, still within that area for the most part, comes into that 1 a.m. And now, once again, what do we expect? Movement's going to come in. Movement comes in. Movement comes in. What should we expect next? We're at around 8 a.m. What should happen now? Movement should come in. Huge orders moving the market with a structural play in motion. And notice how now these higher time frame S&D zones off of the 3-box strategy, right? 3 box, S&D delivers. 3 box, S&D confirmation on a lower time frame like a reversal, continuation. And that is how your understanding of sessions should basically color the times you want to trade, the pairs you want to trade, and how to fit trading into your daily life if you're not trading full time just yet and you might be doing other things in your life, right? But this is how you need to understand when price comes in, why price moves, and how it moves, right? And guess what? This is going to be, for the most part, not 100%, flipped during the pairs that correspond to Asia. So instead of the Asian session being the one that has the most consolidation, you're going to see more London and New York sessions experience consolidation on pairs like USD Yen or NZD JPY, right? Pairs that correspond to the Asian time zones. And how do you know which pairs do or which pairs don't? Well, that's something you can easily look up. Google is your friend. It has all the time zones of every single country and what time zone they live on, and what time zones, as you link those up with the actual charts, are going to best affect which time zones are going to best affect which sessions on a given pair. So if we go to something like UJ, I'm going to break this trade down actually in probably a future video now because I've taken so long on this one. How long is this one going now? Yeah, about 30 minutes. So we should roll this one up soon, right? But what you're going to have is the same thing. You have a high probability 1 hour S&D zone or about a 4 hour S&D zone here on a higher time frame. And coming into the new year, it doesn't even matter what day it is, right? Remember what I said. We had like over 6 members get funded into the last 2021 of December, and they're killing it. And all of December, we were absolutely murdering the charts. And not because we have some kind of crazy sauce, it's because we teach our clients to think and act with rule-based systems that are not clouded by some kind of nonsense, right? If the rules are there and your setup is occurring, there's no reason that setup should not be taken or executed upon. Again, not financial advice. Definitely do this on your own accord, but test it. So what happened here? Well, coming into that session, right, notice what we have here. During American session, right, so around, you see this is around that Asia, this is from that 1 a.m. right here until around 8 a.m., 10 a.m., right? So this is pretty much America and London. Notice what happens. Price is in a very, very large consolidation. Something that some smart money people would not be able to explain to you. Why is this one not moving? Well, because in this case, the sessions that are going to matter, the ones that are going to see liquidity injected into the market, the ones that are going to see volatility injected, the ones that are going to see the composite man transfer those weak to strong hands and get involved on large moves that are then going to sustain themselves, those are going to happen during the Asian session. And as we come into that 1 p.m., right, where's that 1 p.m.? Where is that 1 p.m.? As we come into that 1 p.m. right there, right, or just a little bit before, because as I said, sessions are not necessarily on a one time-by-time basis. That's also something people get wrong. They're not on just a guaranteed time. They act around these time zones because if they always acted on one time, everyone would know exactly what to do. Remember that. This is not how the market is. The market has its own way of moving. The market has its own patterns, as you want to call it, that it prints. Our job is to understand when these things occur, how these things occur, how to use that occurrence to create rules out of it and begin to get involved with it, and then allow those trades to sustain themselves and move over a longer period of time into your higher time frame beliefs and orders. Right, so coming into that, you can see that into the Asian session is when price takes off greatly, right? And then into, once again, London here, it still moves, right? Why is it moving into London Open so aggressively? Why is it still moving in this case, even during the US session? Why is that happening? Well, because we're trading a pair that is still including and has one of the most liquid pairs, I believe, the US dollar, right? So this is how you need to formulate an understanding about when to utilize specific sessions, how to utilize them, and when to expect movement or continuations or reversals to come into the market, and when to expect something to remain more stagnant and potentially create only lower time frame structural plays inside a maybe much bigger range, right? And you can still trade it and you can still make a lot of money doing it, but you need to begin and start to incorporate this understanding in your trading, right? And don't get caught up on just thinking in terms of trading this one setup during this one time. Instead, start thinking about how these setups formulate, how they occur during these times, and how you can allow that to be added into your system in a beneficial way. And hopefully this video, along with the previous one where I went over the specific times and guidelines of the session sauce, are able to do that for you. And if you want an idea about how to get involved and you want it all for free, check out my 3-box methodology video. I have a ton there, or any of the other stuff on my free YouTube. Other than that, if you want to take yourself to the next level, if you want to incorporate what we do here and have a foundational step-by-step course understanding built from the ground up with exclusive concept, content, and confirmations, and access to a community, including me, very active in the group, as well as other funded members with mentfunding and other firms, definitely check out the link at the bottom in my description or the link that you see right here on the screen, launchpass.com/mentfx/mentfx. Other than that, guys, thank you so much for tuning in. Welcome to 2022. We got some insane stuff planned for you guys. I will actually go in depth on this Asian session trade in the next video, but I appreciate you all so much, and I will see you all in the next video. See you guys.